I want to take this session and examine the importance of RSI divergence. Now, I added relative strength from Wells Wilder's book, New Concepts, where he discussed the importance of relative strength divergence. And in fact, in that book, he states, although divergence does not occur at every turning point, it does occur at most significant turning points. When divergence begins to show up after a good directional move, this is a very strong indication that a turning point is near. Divergence is the single most indicative characteristic of the relative strength index. Now, this is from Wells Wilder's book from 1978, New Concepts in Technical Trading Systems. This is an incredibly valid and important technical indicator, probably the most of all the indicators out there when it relates to harmonic patterns. Now, there's other concepts that are much more advanced that I get into in my book, Harmonic Trading Volume 2. And I initially released this information back in 2005, where I compared relative strength divergence with harmonic pattern completions. But for right now, I just want you to focus on relative strength itself and look at what divergence means. Now, when we're talking about a bullish divergence, typically we're looking at price that rallies to a nominal new low while the RSI retest holds the prior extreme oversold test. We'll look at an illustration here in a second, but within harmonic trading, the key is the comparison of the price measurement, as typically we're looking at a price that will reverse within a 1.13 to 1.618 expansion range of that RSI impulsive structure. And we're looking at this as it rallies after retesting the oversold level. Now, these formations are typically found in extension patterns, but can happen and can occur in all harmonic structures. And we'll look at some examples here in a second. But here is the illustration, and this is a powerful technical development. This is one of the key means that I use for confirming various extension patterns and for defining complex technical trading situations that are identifying a very complex, unique area that is in particular especially unique from other measurements, other patterns, other RSI formations. Now, starting at the X point, we typically have that nominal initial low, and this generates an oversold test where the technical reading bounces after testing under the 30 level. Then it reverses as this nominal reactive price move occurs up to the A point. Now, within what I consider a harmonic trading bullish divergence, there's some very key distinguishable events that must occur that separate a divergence reading from other nominal readings. One of the main points is that this initial reaction from the A point must test the 50 level. That's critical within that RSI reading. So as X to A bounces from this reactive move over the from the oversold area, we hit the 50 level. This A point then rallies and begins to roll over. Now, this is where the serious technical formation occurs, is from A to B. And what we'll see is that after testing this 50 level, the price action will begin to roll over. In terms of price, this is usually just a secondary test of some type of support. But here's the key. When we have the secondary test of the oversold area, When we come down to this B point exceeds the initial point X at either a 1.13 or as much as a 1.618 extension. Now, the price action will stabilize, reverse at one of these extension ratios. At the same time, the relative strength reading reverses out of the oversold area, and the secondary test reverses above the initial low of the RSI reading. So we have price going below the initial point X, while the secondary indicator reading is higher than the initial point. It's this type of development that gives us an early signal of a major reversal at hand, of some type of substantial technical formation in the trading history that's telling us that this secondary retest in the price was overdone, and the internal reading of the relative strength is indicating strength at hand, and that there's a potential powerful reversal unfolding. Now, when we compare it to a pattern, this is where we really bring together the strength of harmonic patterns with the incredible technical formation of RSI BAM divergence. Now, as we looked at in the other seminars of RSI and RSI BAM is a unique type of divergence where our initial reading is a W formation up to the 50 level, and then followed by a secondary test, which is impulsive. I encourage you to go back and review the basics of the RSI BAM, but this is where we bring together the most powerful elements of harmonic pattern price recognition and Wilder's divergence concepts. Now, I've taken this a step further by differentiating the RSI structures, as well as mandating this 50% requirement. That is, we must have a minimum 50% test of this midpoint before the secondary test can occur to validate the overall technical phenomenon of the RSI BAM divergence. Looking at this daily chart of Chevron Texaco, we have a really nice bullish butterfly, and we're talking about a daily chart here. So look at this chart. Notice at the X point, this initial low, we have a really nice W formation. That's our complex reading. Then we have this secondary test that comes up and tests and hits the midpoint of the 50 level. So our anticipation then is looking for that secondary test at some point. The interesting aspect is that in this, as this is consolidating and this X point to A point begins to roll over, we have a consolidation of a butterfly pattern formation, a beautiful, distinct bullish butterfly. Now, we never get a trigger of that secondary test until much later, literally 9 months later on the daily chart. It's not until we have the secondary test right here of the impulsive reading in January, 6 months, 7 months after the initial low was recorded, where we have the full complex formation of two readings, 1, 2. Our secondary reading is higher than the first reading. At the same time, we get a beautiful butterfly formation. Now, this is the true power of combining these techniques. We have an RSI BAM divergence because the price is lower, while the secondary RSI test is higher. On top of that, we have a beautiful bullish butterfly that's formed in between these 2 points. So that butterfly gives us the exact price range where we want to look to execute the trade opportunity and trigger off of this secondary test, because we don't even want to look for an opportunity until we get that secondary test of the RSI. When we can line up and identify this type of phenomenon where we have two RSI tests with a valid harmonic pattern completion, then we know we have a unique and a substantial opportunity. Now here is a chart of the price action in the potential reversal zone. Clearly look at what happens after this initial test of not only the pattern completion, but the reversal from the secondary RSI reading. It hits the 30 level and reverses. At the same time, it completes the pattern. Now, those two technical events are telling us in advance that there's a unique and very strong, powerful reversal unfolding. We utilize the combination, the simultaneous combination of these two measurements to define extraordinary opportunities, more than just a simple pattern unto itself. If we're looking at the price structure itself and we have removed RSI, look at the butterfly structure itself. Now, the pattern is a nice pattern, and if we didn't have the RSI on the chart, then we could argue that this butterfly structure is still unique and a substantial trade opportunity. But with the understanding of that RSI brings us, that RSI divergence and the reversal behavior of the RSI, that tells us that the pattern unto itself is a very substantial opportunity, more so than any other pattern alone. I encourage you to look at more information regarding this on my book, Harmonic Trading Volume 2, or check out any one of the webinars at the harmonictrader.com website. Thanks.